Welcome to the UK Investor Magazine podcast, the latest on shares, markets and investments, now available on your Amazon Alexa.
Hello and welcome to the UK Investor Magazine podcast, now also available on the UK Investor Magazine mobile app. For today's podcast, we're going to be taking a deep dive into Cornish Metals. We're going to be looking at the operations down in Cornwall. We're going to be looking at the latest developments for the company and what investors can be looking forward to in the year to come. And to do that, we're very kindly joined today by Fawzi Hanano, who is the Chief Development Officer of Cornish Metals. Fawzi, thank you very much for being on the podcast today.
Thank you for having me, Jonathan.
So, regular listeners to the podcast and attendees to our events will be aware of the Cornish Metals story. Of course, Cornish Metals did present at a couple of our events this year at the London Stock Exchange. But for those people that maybe aren't aware of Cornish Metals, Fawzi, please would you be able to give them an introduction, first of all, to yourself as well as the company, please?
Certainly. So I joined Cornish Metals in September of 2023. I look after corporate development and investor relations. I spent my whole career in the mining sector for over 20 years. Firstly in biz dev roles with Rio Tinto. Then I spent a dozen years in equity research at various investment banks. And then back to the corporate side, and here I am. So very excited to be with Cornish Metals. In essence, what we're looking to do here is to bring back responsible tin mining to Cornwall in Western England through the South Crofty asset that we own 100%. This is a mine that's been in production for over 400 years. It closed in 1998, not because it ran out of tin, but because of very depressed tin prices at the time. Prices were sub $5,000 per ton. If I look at the screen today, prices are at around $30,000 a ton. So we are looking to bring this mine back into production. We've been doing a lot of work over the last few years, and we believe that tin is a strategic metal for the UK. It is on the critical minerals list, yet there is no production whatsoever here, nor in all of Europe or North America outside of some recycling. So high dependence on imported material, be it from Latin America or more so from Asia. But we all know that Western governments are looking for security of supply. And so this could bring some security, at least for the UK and Europe.
Thank you. And I do, you mentioned tin there, and that's a place I'd like to start, Fawzi, so we can set the scene and look at the market and the demand for tin. So you actually outlined there a huge move over the last couple of decades to the upside in the price of tin, going from around 5,000 up to 30,000. And of course, you mentioned there that it is classed as a strategic metal. Some investors will, when they hear that, maybe be thinking of nickel or silver or cobalt or lithium. But of course, tin is very important in a number of applications. And that's something that I would like to jump into now. So, Fawzi, what are the main applications for tin and what has been driving that price higher in the price of tin in recent years?
Well, when we look at tin, the main applications for tin are in anything electronic. So tin, about 50% of the end use of tin goes into the manufacture of solder, and that is used essentially as the glue in electronics for circuit boards. So if there is any electrical connection, tin needs to be used. And if you go back a little bit over the last 25 years, prior to the early 2000s, lead was used as solder material. However, in around 2005, the EU mandated a ban on the use of hazardous materials in electronics. And so that meant that lead could no longer be used, and tin was the only substitute that can be used. So pretty much overnight, tin went from being a metal used mainly for standard industrial applications like alloying, chemicals, tin plating, so for tin cans. And then we've added a whole new end use, which now is half of the total uses for tin. And if you look broadly beyond that, what that means, the biggest drivers for demand growth for tin are really from technology and the energy transition. So from the energy transition side, one example is solar. When people think of solar, they think mainly of quite a high intensity of use of silver, which is correct. But they forget the fact that the panels are connected by a copper wire, which is coated by tin solder. And the use of tin in this application alone is close to about 10% of the global tin demand. So it is quite significant. And we are, of course, seeing a growth in power generation from solar, being up from about 4.5% in 2022 to 5.5% in 2023, and an upward trajectory from there. So that's going to be one area driving demand for tin. Obviously, EVs are another area, and this is something that's true for a lot of other metals, whether it be copper, nickel, lithium, of course. And you see a higher loading or intensity of use of metals in EVs compared to internal combustion engine cars, given the higher electronics use in there, and just more the general trend as well, where you see more active safety. And you go into any car now compared to a car that's 20, 30 years old, you're facing a whole bunch of screens. So it's all electronics and computerized versus more of manual that you had previously. So these are strong drivers. But I'd say the last one, which is also very exciting, is artificial intelligence. You need tin to make any chip, so any graphic process unit, that's manufactured by NVIDIA, for example. These need tin in them to make the circuit boards. So as you see higher complexity of AI models out there, that means more processing power required. We're seeing a huge move towards increasing data centers and data processing. So that is positive for tin in terms of driving its demand. So when we look at what's really driving the tin price, it is, of course, all these positive demand factors I've been talking about, but also supply has been quite disappointing. You look at supply in tin, and it is very consolidated. About 2/3 of mine supply comes from 3 countries in Asia: China, Indonesia, and Myanmar, and about 80% of refined supply is from Asia, with China having the strongest position, which is not uncommon in many other metals, where China has really built up its capability and taken a strategic move in securing a supply of materials over the last 20 odd years, leaving the Western world a lot more reliant on China. So when we look at supply, not only does the Western world need to now find other ways of securing supply and reducing that reliance on China and other Asian countries, but also if you look over the last year or so, there's been quite a lot of disruptions. So the second and third largest tin mine producers, which are Indonesia and Myanmar, have had quite a bit of disruption. In Indonesia, there's been a change in the export licensing process that led to no exports whatsoever in January and February of this year. And exports now have recovered, but still are below year ago levels. So that's been a bit of a drag on the supply side. Whereas in Myanmar, the majority of tin production is from the Wa state, which is rebel controlled, and there has been a ban on mining in that area since August of last year, which means that exports from Myanmar, which all go to China, have fallen quite significantly after they've exhausted existing stockpiles. So that just means that inventory levels are quite low, especially in the physical market for tin concentrates. And we believe that going forward with a strong demand pull, that the supply will not be able to keep up. And so it will continue to support the price upward from here, we'd expect.
Thank you very much, Fawzi. So a very compelling story there from the demand side, and of course Cornish Metals is looking to fill that with the supply from the South Crofty mine in Cornwall, which I'm going to discuss now. We'd like to discuss now in a little bit more detail, Fawzi. So I think it would be good for listeners if you could provide an overview of South Crofty. Of course, the mine located just outside of Camborne in Cornwall. It would be good if you may to provide us some information on the resources. What does the resource look like there, as well as the level of production that you're hoping to achieve from South Crofty when it gets back into action?
Certainly. So like I mentioned earlier, the South Crofty mine didn't close because it ran out of resource, but because of pricing. And it has been operating for about 400 years. So that's kind of frames what I'm going to talk about now. The latest mineral resource estimate that we published in 2023 indicated about 6 million tons of resource at grading about 1.5% tin. So that's about 85,000 tons of tin contained in the resource. However, this is just based on the current resource estimate. We believe there is significant upside to drive this figure a lot higher. And just pointing to that, a couple of examples. One is looking at history. If we look over the last 24, 25 years of production at the mine, and this actually is true going further backwards, there has been a consistent replacement of all the ore that had been mined out. So every year we've consistently converted and added resource more than what's been depleted, more than a 1-for-1 ratio. So if I just give you an example, in 1974, we had about 3.5 years of mine life remaining. Nearly 24 years later, in 1997, we had about 4.5 years of mine life remaining. So that's just evidence that we are able to continue to replace, once we're in development, that we're going to continue to do sampling and convert and add to that resource. And we believe that that trend will continue going forward once we get the mine back into production. So when we look at the PEA study that we put out earlier this year, it indicated a 14-year mine life. We believe that very much underestimates what the potential is here. And we believe that South Crofty will again be a multi-generational asset and produce for decades and decades. And just to kind of support that, 2 or 3 weeks ago, our geologists completed a study where they've put out an exploration target for South Crofty, really looking at only the near mine, near-term kind of exploration potential by extrapolating, the existing loads within the mineralization. So not looking elsewhere within our mine permit area. So keeping it very focused. And from that work alone, they identified an exploration target that could potentially add mineralization of between 6 million tons and 13 million tons, grading about 0.5% to 1.8% tin. So that compares to our current resource of 6 million tons. So we're seeing that there's potential to double or triple the resource just based on the exploration target work that was done. And we believe that there's still a whole lot more to do as you continue along strike, down dip within the resource itself, and of course, other mineralized zones within our mine license area. So looking at that, when you look at the study we put out earlier this year, the expectation is that we'll produce about 5,000 tons, 4.5 to 5,000 tons per year of tin over the life of mine, and that could keep going for a long time. But importantly, the process plant has been designed to allow for an expansion. So there's sufficient space there already allocated so that we could have a minimal capital requirement to expand this that could lead to a 50-60% increase in that production throughput if that could be provided through the throughput from the mine.
Fantastic. Thank you. So I just want to talk about funding because you've actually got funding in place. Fawzi, I believe you've got a credit facility arranged with Vision Blue Resources, which is fantastic news. How is this going to be deployed? How are these funds going to be deployed on bringing South Crofty back into production? What are the main workflows that you foresee in the coming months?
Well, Vision Blue Resources are our strategic shareholder. They own about 26% of the equity in the company. They came into the stock in May of 2022, having anchored a £40 million equity raise, investing £25 million at that time. And that really provided us with the funding required to move things forward to where we are right now with some of the very important elements, such as completing all the metallurgical drill and testing work, building the water treatment plant, commencing the dewatering of the mine, and various other activities. So a lot of that was funded from the funds that we got from the equity raise. But that's been now more than 2.5 years ago. So in October of this year, we did announce a small short-term loan of £7 million from Vision Blue, who are demonstrating that they are quite supportive in the company and the asset. And these funds allow us to continue the activities, with the main activities that we are undertaking right now being the refurbishment of the new cook's kitchen shaft. This is the main production shaft that we have. The refurbishment work is underway there, and that commenced earlier this year, as well as the continuation of the dewatering activities that we are doing.
Thank you. So I know dewatering, that's a big thing for Cornish Metals at the moment. I know it was something that you highlighted the progress in at the events at the London Stock Exchange earlier on this year. I'm sure investors will be keen to hear any progress there, Fawzi, if you're able to share anything. Certainly.
So dewatering commenced in November of 2023. And the progress has been as or better than expected throughout the month while we were doing dewatering. While we are still dewatering right now, we are actually holding the water level steady at about 280 meters below the surface. And the reason for that is that we've decided to bring forward the refurbishment work of the shaft. The initial plan was to dewater, then refurbish, but we've brought forward the refurbishment work. So other refurbishment work is underway. Once it catches up with the water levels, then the two will start going down in tandem. And the expectation is that both will be completed by the end of 2025.
Fantastic, thank you. So, of course, the Cornish mining industry, boomed 100 or so years ago. But of course, as you mentioned there, falling metals prices, did see a lot of mines closed. Now, as you start production again, relationships with the community are very important, Fawzi. So it'd be good if you could give us an overview of the work that you're doing in the community and the engagement that you're having with the community and what the feedback's been.
So South Crofty was the last tin mine to be in operation in Cornwall, having closed 26 years ago. And there's been multiple attempts to bring it back into production. And we are now moving that forward. And we hope that we'll be able to bring it into production very, very soon. In terms of the community, there is a lot of support. The community really want to see South Crofty back into production. It is part of the heritage of the region. But also, what is quite important is that we will be generating a lot of highly skilled, high-paying jobs for the area. So we're looking at about 320 direct jobs to be generated, as well as another 1,000 indirect jobs. So that's going to be quite important in terms of what we'll be contributing to the local area. So clearly, a lot of that support is from the prospect for employment. And one thing that South Crofty has been doing, and the company as a whole, is really focusing locally, whether that be for employment or contracts with the trade or any other supply. We focus first on the local area within Redruth, Camborne, and the proximity. If we don't find what we need there, we kind of spread out to southwest England, then more broadly within the UK. So there's a strong focus locally, and we currently have about 80 employees at South Crofty, excluding the chief executive. Everyone is local to the area, so that demonstrates the focus has really been on employing locally when we can, and so far we've been able to do that.
Fantastic. That's that's great news, and of course, great news for the community there. So to finish off now, Fawzi, investors that are engaged in the story, looking at Cornish Metals in the year ahead, what would you say are the three most important things that investors should keep an eye out for in 2025?
Well, I'd say that it's going to be a very, very important year for the company in 2025. If I look at three very important milestones that we expect to achieve, one is, of course, as I mentioned earlier, the completion of the shaft refurbishment of New Cook's Kitchen shaft, as well as the dewatering of the mine to be completed by the end of 2025. A second extremely important milestone would be the securing of the debt finance for the project. We announced the appointment of Endeavour Financial as our financial advisor in October, and they will be moving this forward with the intention to secure our debt funding by H2 of 2025. And lastly, we will look to commence some early works in early 2025 around Q2. These would include, for example, the groundwork for where the process plant will sit, as well as putting down deposits for long lead items, such as the production winders. So, by doing this, we will continue to advance the project and de-risk the project. So all these three elements that I've just mentioned will be further de-risking the project as we moved into full construction and eventually into production.
Fantastic. Thank you, Fawzi. Just a quick note to listeners, do check out the video section on the UK Investor Magazine website, and you'll be able to watch one of the past presentations that Fawzi delivered at the London Stock Exchange, one of our events there recently. And that does illustrate a number of the points that Fawzi has kindly highlighted for us today. So, Fawzi, thank you very much for being with us today.
Thank you very much, Jonathan.
And thank you very much to everyone for listening. Thank you.
We hope you enjoyed listening to the UK Investor Magazine podcast. Please do share the podcast, and we really value any reviews and comments you leave us in your chosen podcast player. The views presented by the hosts and guests of the UK Investor Magazine podcast are in no way investment advice, and please remember all investment involves risk.